Hello again. Just like to talk about the overnight report for the 10th of July 2015. Equity markets overnight stabilised and were up overall, and commodity markets were the same. They were up. Most markets were up. Commodity markets did bounce quite a bit, and iron ore particularly was up 9%, so finished at about $48.50 US a tonne. The day before, as you remember, iron ore was down 10%, and it went through $50 and ended up about $44. So many people think that it was because of collateral that was used for the equity market in China, where basically the Chinese market yesterday, not the day before yesterday, was down about 6%, and there was the People's Bank of China were in there creating liquidity and helping support some of the big share broking agencies and the like with liquidity and reducing some of the collateral that was actually required. So we did see bond yields in Greece still up 57.626 for the 2-year rate, but Greece did submit a reform proposal last night to the European Union, the European Central Bank and the International Monetary Fund for more bailout funds. The reforms they've put in place seem a little bit harsher than the austerity that exists, and it consists of selling assets such as ports and airports. Greece needs about $370 billion euro to get its banks afloat. Just put that in perspective. During the 2008 financial market crisis, Citigroup, which is a big investment bank in the US, needed 2.513 trillion. Morgan Stanley needed over 2 trillion, and Merrill Lynch needed over 1.94 trillion. Plus, there was a lot of other different banks that needed bailing out, Deutsche and lots of others. The government actually bought shares. The federal government actually bought the Fed. The US government actually bought shares in those companies, in those big banks, and the big bosses who get paid fortunes didn't lose their jobs. And the reality is the taxpayer basically paid, because the big guys didn't lose their jobs. All the small people at the bottom got sacked. And essentially most of those big guys are still employed today on their big salaries. So I must admit I'm a little bit cynical, because the reality is the people at the top never seem to get sacked. Now, just going back to Greece, so Greece has decided they're going to privatise Greek Telecom. They're going to increase their value-added tax to restaurants to 23%. They are increasing the corporate tax rate. Greece, keep in mind, is the highest value-added tax and corporate tax country in Europe. So it is a bit concerning that they're going to be increasing all these taxes, because you may get to the stage where tourists don't go there because they are just so expensive with all these taxes. The whole hotel VAT tax again is going to be levied at 13%, and they did say that they didn't want to apply this to some of the islands until 2016. The Greek government didn't abolish a 30% tax break on all its islands as requested by creditors, but they said they would scrap it on some of the wealthiest islands that are the most popular with tourists. I mean, ultimately the tourists are going to be paying for this, and the concern is if they tax the tourists too heavily, then it's going to even crump economic growth even more. So Greece has said that they'll reach a primary surplus target of 1% in 2015, and in 2016 a surplus target of 2%, so they can pay down debt. They're actually reducing defence spending by $300 million, and there's going to be some sort of solidarity surcharge on income tax to be increased, plus collective bargaining is going to be introduced, which effectively means that wages will be reduced depending on who, if there's collective bargaining, then basically, wages get reduced, and they look at all the expenses in a business and try and do it as cheaply as they can. Luxury tax will be applied on TV ads immediately. And going forward, they do want to adjust the pension, which is not great because the pension has been reduced already by a third. They want to reduce the exit benefit, which is a supplement to the pension, which is going to end by 2019. Again, that's not a great story really, because a lot of the Greek families are living on these pensions, and they have cut the pension already, and if they cut it again, it could be quite difficult. They will be increasing tax on shipping companies. Cyprus, the Greek Prime Minister, does need to get this through Parliament. Things are pretty bad in Greece at the moment, and the reality is if they don't get this money from the ECB and the European Union, the banks pretty much on Monday morning will not have any money, and the markets will certainly see that as a Greek exit of the euro. So there's a big meeting with 28 leaders of the European Union in Brussels on Sunday to decide whether to give Greece more money, but currently at the moment it looks like those proposals, the French government and the Italian government are quite happy with those proposals. So let's just wait and see what happens. But Greece definitely needs the money. If they don't get the money, the banks will be broke on Monday, and it'll be absolute pandemonium, and ultimately the Greek people will suffer. Look, thanks very much for listening. I hope that helps a little bit, and let's just see what happens with markets. Cheers for now.